What's up, everyone? It's Caddy with MoneyVest. So markets here ripping higher on the back of somewhat hotter than expected PPI numbers. So we broke that down in our live stream earlier today. And of course, yesterday we had the CPI numbers coming out, which came out a little bit, again, hotter than what the expectations were. And more importantly, tomorrow is when the earnings season is getting started. So we've got the banks reporting first. I think JP Morgan and Wells Fargo and some of the other bigger banks and institutions are going to be starting us off with the earnings season here for the first quarter fiscal year 2024. And it's all going to come down to technology, Magnificent Seven. And those are the actual companies and stocks that were pushing higher here on the day, as the markets did really well, with the NASDAQ pushing up over 1.7% here on the day, with of course the S&P 500 pushing higher as well, up a little bit over 1%, almost 1%, 74 basis points, and the Dow Jones here pushing slightly down, so basically flat on the day. So a lot of the momentum was going towards technology and Magnificent Seven stocks here, as earnings expectations are really, really high. So hope you all enjoyed this video and find it helpful. If you do, make sure that you drop a like and don't forget to subscribe to the channel. I would really appreciate that. We're very close to 78,000 subscribers, so thank you so much for joining and being a part of our community. And links to our Discord and Patreon is going to be down below if you're interested in joining us. And of course, getting access to all the members-only private videos, including over 18 private Discord channels, all the trade ideas and trade setups, all of our trading alerts, options alerts, and again, long-term investing and trading alerts as well as the early access to the MoneyVest Pro platform that's going to be launching very soon. It's going to be under beta testing for all the existing members, and this is a discounted pricing that's going to be locked in for you forever. So link's going to be down below. Would love to have you on board. This right here is the CPI numbers, which came out yesterday, which we already talked about. So year-over-year percentage change in February, we're sitting at 3.8 to 3.2%, with month-over-month increasing at 0.4. This was from Mohammed El Arain, and this is basically what he said, that US CPI inflation came in hotter than expected for the third straight month, and the result is continued price pressure on consumers, which hits the poor hardest, and a sharp market reaction. Both headline and core prices rose 0.4%, bringing the annual increases or measures to 3.2 and 3.8% respectively. Services led the way, which we discussed in our previous video, but they were far from the only drivers of the hotter inflation. Yields immediately surged higher, with the 2-year currently trading at above 4.9 and the 10-year trading almost at 4.5%, which it did cross over that level today. And the market is now pricing in less than 2 federal rate cuts this year, as it takes another step in the later and fewer direction for the excessively dependent Fed. And the major stock futures indices are down over 1%, of course, rebounding today after the PPI numbers came out, and the dollar is stronger. And all of this puts the Fed in a quite tricky position, one in which it would take a holistic view on what's ahead for the economy as a whole. But will it? Right, is the real question. Now, before we move forward, this is a trade idea I mentioned in our Discord for Apple. And in my previous videos, I've continued to mention that there is a lot of consolidation. There's a lot of accumulation really happening for Apple in and around that support. That's the S1 support here. That's the first level of support. The second one is down here. And of course, the third one all the way down here. And right now we are seeing a very strong recovery and of course, a rally for Apple here on the day. Massive green candle coming in, 4% higher, 175 with the RSI MACD pushing up, and not to mention this right here, 4 back-to-back candles of the L3 banker oscillator. This is essentially what the Wales indicator is. This is all tracking big orders that are coming in for individual stocks. I specifically talked about this in one of my videos. Whales are buying this stock here as they continue to accumulate, as Apple is down over 15 to 16%. And this is, again, a very clear sign that we're seeing a lot of momentum higher. And in my opinion, there's more potential upside here, with my price target remaining steady at highs of $196 to $199. So price target still at $196 is what I mentioned. So again, if you want to get access to all the trade alerts and ideas, I don't share a lot of trade ideas, but when I do, they are going to be high quality setups. Google was one of them. AMD and Enphase are still on play right now, so that's going to be, again, part of our analysis. There's a channel called Trade Ideas where you can track each and every trade idea that I've shared and the progress and the result in the outcome. But Apple is another one with the price target again back up to 196, 199, and that carries about 14 to 15% potential upside here for Apple, considering how oversold it is. And of course, the RSI, the MACD, and more importantly, the L3 Banker Oscillator showing very good signs of that potential uptrend. Now, coming back over to inflation. So inflation data is noisy, and the market reflects a reality that there are clear signs of disinflation in lots of places, but the last mile of inflation, and it's funny how, what I've talked about on the channel, what we have been talking about, discussing on the channel, is now what I'm hearing and seeing on a lot of media as well. We've talked about the last mile. We've talked about the last little bit of inflation that needs to be kind of put out from a economy standpoint. It's a lot easier to go from 9 to 4%, but it's a lot more difficult to go from 4 to 2, is what I mentioned before. And the last mile of inflation fight is going to be the most difficult, says Jamie Cox, managing partner at Harris Financial Group. And this is exactly word for word what I mentioned, I think, in my yesterday's video, in my previous live streams as well. And I gave the analogy of when you want to lose, let's say, your body fat percentage, a lot easier to go from 20 to 10, but a lot more difficult to go from 10 to 8%, because it then requires a whole new level of dedication and, of course, commitment to your goal. And meanwhile, the New York Fed President John Williams said during an event on Thursday that there is absolutely no need for a policy change in the near term. And this, again, is a very hawkish statement. But all in all, the bottom line is the market does not give a single, you know what I mean, right? Does not care absolutely at all, because we've seen a lot of momentum here on the day, recovering back higher. I'm going to actually break down the technical analysis for both the NASDAQ and the S&P, because it was actually quite interesting that the S&P got up to as much as 5,200. That's the level to pay attention to. And the NASDAQ actually broke out of its lower highs and lower lows and its downtrending channel. So obviously there was a lot of momentum and a lot of demand for Magnificent 7 and big tech stocks. That's exactly what we're going to discuss. And this comes on the back of hotter than expected March Consumer Price Index. This is, again, John Williams' statement, and which sparked a market sell-off. Minutes from the Fed's meeting last month also showed that some officials remain concerned about inflation's path towards the central bank's 2% target, and their treasury yields popped following the news, and they rose again on Thursday with the 10-year notching over 4.5% as well. So U.S. stocks obviously rising as tech rebounds ahead of earnings from major Wall Street banks. Now, tomorrow is the earnings season getting started, but here's the thing, and this is what we discussed in our live stream. On one end, you've got inflation that is actually coming in hotter than what the expectations were. So CPI and even PPI. I don't know why there's some headlines suggesting that the markets are rallying on softer or cooler PPI numbers, because clearly the core PPI numbers came in hotter than what the expectations were. Maybe they're trying to push the narrative. I don't know. But the bottom line is inflation is stable, it's stagnant, and it's hotter than what the expectations were over the last couple of reports that you've gotten. That's a separate issue. Interest rates expectations have gone down. So they've gone from 3 rate cuts now down to 1 rate cut in 2024. So there's been a little bit of repricing in terms of expectations for interest rates, but that has still not put a significant impact on the overall market. I think really what the market is rallying on is 2 reasons. I can really think of just 2 reasons why the market is seeing such massive amounts of momentum, and again, liquidity flooding back into technology. Number 1, there's already a lot of cash sitting on the sidelines, right? If you think about it, money market funds are flushed with a lot of cash, upwards of almost $6 trillion. So there's a lot of cash just waiting on the sidelines, ready to be deployed. And so far in 2024, that cash has not yet gotten an opportunity to get back in. There's not really been a proper serious buying opportunity for that cash to get back in to the market, because the max drawdown we've seen in 2024, 1.7%. That's it. It hasn't been more than 1.7. It hasn't even been more than 2%. I think it was up until yesterday, it was at just under 2%. After yesterday, it was a little bit over 2.4%. But the bottom line is, we haven't seen a pretty significant drawdown, and hence the cash that's been sitting on the sidelines hasn't found its way back in. And now every time we see a red pullback, every time we see a little bit of a correction, that cash gets deployed back into the market, which obviously creates a lot of momentum. That's number 1. Number 2, the most important reason why we're seeing some momentum here, especially in technology, and again, NASDAQ here, is because of earnings. Earnings season is getting started tomorrow with banks reporting before the market opens, so that's going to be on Friday. But later this month, and again, going into May, we've got a lot of Magnificent 7, big tech, and S&P 500 companies reporting their numbers. And this is what we discussed during the live stream. Magnificent 7 collectively, on aggregate, is expected to report earnings growth of over, check this, 48% on a year-over-year basis. That is absolutely mind-blowing. In an environment where interest rates are so high, Magnificent 7 and big tech is expected to report earnings growth of over 48%. And majority of that growth is actually coming from only one stock, and that is NVIDIA. Because NVIDIA is going to report triple-digit growth on a year-over-year basis, considering the strong momentum in generative AI, H100 processors, GPUs, everything that they've been doing. They've been selling these chips for well over $30,000, $40,000, $50,000 because of the so much demand there is. And of course, they're the only ones that are super efficient and technologically advanced with this compute power in training and of course using it in these large language models to train AI models here. So again, NVIDIA, massive growth potential, and that's really what's having an outsized impact on overall Magnificent 7 and big tech companies. And those are the two reasons, in my opinion, we're seeing a lot of momentum in the market, because if I think logically where yields are, where the dollar index is, where the volatility is, right, where crude oil prices are, where inflation numbers are, where interest rates are, if you look at all those things, right, from a macro perspective, it just doesn't make sense. It doesn't make sense. It doesn't make a lot of sense for why the markets would keep plugging along at these all-time highs. I mean, this has really been a little bit more of a surprising rally, I would say, because we haven't seen any more than 2% of a pullback. I mean, this is just phenomenal. 2024 has been by far, I would say, one of the strongest starts to any year in history in terms of this bull market. And I think those are only two reasons where I can come up with is there's a lot of cash sitting on the sidelines waiting to be deployed, and there's new money kind of entering the market. And a very clear example also is the fact that since November FOMC, the market has seen a $10 trillion wealth gain in that time period. Since November 2023 up until now, $10 trillion in gains the market has witnessed. Very, very clear example of how there is a lot of money sitting on the sidelines, getting deployed, pushing the markets higher, which is creating even more wealth, which is creating even more momentum, and the cycle continues. This right here are the PPI numbers, which again, we mentioned earlier, and I had a live stream, so 2.8% on a core year-over-year basis. Actually, 2.8% excluding for food, energy, and trade services. Core PPI excluding for food and energy, we are sitting at around 2.4 for this number versus the 2.3% consensus, and the prior number was 2%, so we had a 40 basis point increase on a month-over-month basis here, basically year-over-year, but compared to the prior number that we got in February. So that by no means is a cooler inflation or a softer inflation print. This is by far a hot inflation number. But of course, we did see a lot of momentum. So Apple here pushing up 4%, NVIDIA up a little bit over 4%, Amazon pushing higher 1.7%. I think Amazon hit a new all-time high. 4K Friday. Here we go. Almost, because we're at $190. And I think, yes, we did it. We actually did it. So 20-for-1 stock split at $190. That is going to be $3,800 on a pre-split basis for Amazon. We always joked about 4K Fridays, 4,000. Maybe tomorrow's a day. Tomorrow's a Friday. We never know. But Amazon would need to actually rally quite a bit to get up to over $200. It would need to go up a little bit over 8%, which I don't think is going to happen tomorrow. Maybe next Friday. But the bottom line is Amazon hitting a new all-time high. Huge congratulations to everyone. I could not be more happy for everybody who has stuck with our analysis on Amazon and was convinced that this company has potential. Because I remember, again, Amazon had a very similar narrative around the company back when it was trading in the 80s, when it was down a little bit over 56%, that Amazon is a debt company. Again, Amazon's business model is not going anywhere. It's a waste of time. It's going to be dead stock for the rest of the years. But here we go. Massive recovery. I think it's up over 150%, 135% from its lows. And the recovery has been amazing. So congratulations to everyone. 4K Friday coming up very, very soon. That's going to be almost $200 per share for Amazon. Google pushing higher to new all-time highs as well. Meta pushing up to almost new all-time highs, I believe. Microsoft also pushing up. So lots of momentum in big tech. I mean, that's really what sucked up a lot of the liquidity here on the day. So you can see the technology, comm services, and cyclicals. Those are your main three sectors that have all Magnificent 7 companies pushing higher at least 1%, if not 2%. And then other sectors basically flat in the last 1 week. Again, a little bit of a split market with comm services, technology, cyclicals all pushing higher, with healthcare, utilities, real estate, and financials pulling back. And in the last 1 month, again, a little bit of a split market as well. Coffee prices, oats, platinums, gold, silver pushing higher, with orange juice, sugar, soybean, and natural gas down. And then again, Bitcoin here just trading a little bit under 70,000, just over 70,000 by the way. And Ether here just over 3,500 as well. Volatility crushing back down, down over 5.6% on the back of this very strong rally in the NASDAQ, so just under 15. And crude oil, I believe, is also starting to see some consolidation sideways here as it approaches that overbought level. And support level is going to stay put at $81, $82 per barrel for crude oil. Now, coming over to the S&P 500, I think it's really important for us to discuss what really happened here. So this is the entire chart that I shared in my yesterday's market update and also in my live stream. And what I mean over here, the basic analysis of this chart was that we are making lower lows and we are making lower highs. So the idea here is that yes, the rally was good. Yes, there was momentum on technology. But really what I want you to focus on is a very, very important level of resistance here at 5,220. So this right here is going to be that level. Let me just remove that. We're going to put a price bubble here. So this right here, 52.20, is going to be that level to keep in mind. And the reason I say that is because we have gotten rejected there not once, twice, 3 times, 4 times basically over the last pretty much 5 days. So 4 out of 5 days, we haven't been able to break out of 52.20. Even on the day today, you'll notice that we got up to 52.11 and then we kind of rolled over back under 5200. So that will be a very important level to keep in mind as a resistance for S&P to see whether it breaks out of that level tomorrow or not, because then eventually we'll have to, face and retest that level all the way up to 5260. That's the all-time high. NASDAQ, on the other hand, actually did really well breaking out of its downtrending channel. So this was the lower highs and the lower lows. As you can see that it was consistently, making lower highs. It was not going as high as it did the previous time. Over here, bang, bang, bang. This right here was a support, or the low basically. It was going lower than it did the previous time, consolidated sideways. And then today, of course, had a huge breakout above this 16,300 level. And the next level to keep in mind now for the NASDAQ is going to be right over here. Boom, right there. That's the level that we have, again, validated and gotten rejected here multiple times. And that's going to be a target up to as much as 16,000, call it 500 to round things up and keep it even. 16,500 is going to be that level. Rejected multiple times. Once over here, twice over here, 3 times over here. And this is going to be the 4th and final retest here for the NASDAQ. If you break out, fantastic. All-time highs are possible and we're back to, off to the races again. But if you get rejected, then really it's going to keep us within that pattern and within that trend of lower highs and lower lows. Not so much for the NASDAQ because we'll be consolidating a little bit, but S&P 500, it would still be within that downtrend. A little bit of a breakout, but 5220 is that resistance. Now Apple, on the other hand, huge momentum. Lots of buyers stepping in. Volume, I think, was also pretty solid. Over 90 million shares traded, about 50% higher than its average 10-day volume. So that's good. Reversals in the move right now. Targets back up to 196, 197 for Apple moving forward. Talking about Amazon. And Amazon here, as we already discussed, breaking out to new all-time highs. Congratulations to everyone. Lots of momentum. RSI MACD, of course, overbought here. And this is still going to be a little bit of a resistance to keep in mind at 190 for Amazon. Support level is going to stay put at 178. Tesla, on the other hand, seeing some buyers stepping in as well. The bullish divergence continues. Institutional involvement is there. There are some green candles and yellow candles popping up. That is, again, the L3 banker oscillator that does suggest that there are buyers present and are stepping in. But RSI, MACD, and again, this right here, the actual L3 banker oscillator showing some signs of potential progress here. We've got a huge resistance to break out of 177. Tesla's just not able to break out over that level for quite some time. And the next target's going to be all the way up to 197, close to 198 for Tesla. Talking about NVIDIA here, NVIDIA recovering really well, pushing back up. So it was consolidating sideways in that range for some time. If you go over to NVIDIA over here, I believe is where the chart is on the daily time frame. So okay, so we got to go back here. Support level, as we had already discussed, was going to be around 845, and a much stronger support in those moving averages. So if I bring up the 50 and the 21, and of course some of the longer moving averages, we did have a lot of support here in the 800s, right? So low 800s, 810, 820s for NVIDIA, and right now we're kind of recapturing back the 21 EMA. Yesterday, it did feel like it was coming back up to retest and get rejected here possibly, but today's volume and momentum pushing back above that 21 EMA kind of restores confidence that, okay, NVIDIA is not done going higher just yet. So still lots of momentum here. Resistance is going to stay put all the way up to this level at $971 for resistance for NVIDIA. Talking about advanced micro devices and AMD here, it continues to consolidate sideways. Now, AMD is a little bit of an underperformer, or has been. And again, you'll notice that it continues to consolidate at that support, and that's going to be sitting roughly at around 164, 165 for AMD. And the target and the resistance is going to stay put all the way up to 183 for AMD in the short term, all the way up to as much as 216 in the long term for advanced micro devices. PayPal, basically flat, so not really doing anything, so underperforming on the day quite significantly. Resistance is going to stay put at $68, $69, and support level is going to stay put at $65. PayPal has been one of those companies that basically, when the markets are up, it doesn't go up. When the markets are down, it decides to go up. It's just kind of weird. Like, it always, in a way, sends a message that I don't need the markets to go up in order for me to go up. I'm going to go up when nothing is going up. And that's where PayPal has been. Like, it usually tends to outperform on the days when the markets are down, but then significantly underperforms on the days when the markets are up. And that's kind of like a weird thing, because of all the stocks you'll notice that were red, there weren't that many, right? And PayPal was actually one of them, underperforming significantly. I mean, it really, the liquidity kind of flooded into some of the big tech stocks here, without a doubt. Right, so large cap tech, big tech, Magnificent Seven is really where the liquidity went to. But of course, there were other companies that were also pushing higher, like Qualcomm pushed up 2.5%. I mean, we had Datadog, right? We have Snapchat, we had Coinbase, we had Fiverr, we had, obviously ACMR pushing higher. So there was other companies that are stocks pushing up. Enphase was up 1.7%, for example. CrowdStrike, cybersecurity was up over 1%. So there was momentum in other parts of the market. PayPal, for example, for some reason, still not doing anything. Resistance is going to sit at $68. I believe the moving averages are still looking pretty solid. 50 SMA is still above the 200 SMA. The golden cross continues for PayPal. So we'll find out very soon where PayPal stock is in about a year from now. Visa, on the other hand, finding a pretty good support here at around $273. So again, oversold on the RSI, MACD, and again, the L3 banker oscillator. The next resistance is going to be all the way up to $290 for Visa moving forward. And Meta Platforms here, of course, pushing higher a little bit over 64 basis points. I would keep a resistance all the way up to 531, and then perhaps even another level to keep in mind at 514, which is now going to be a support for Meta. But of course, a very strong rally with the support level and the green rectangle, the demand sitting in the 470s for Meta. Netflix here, 599, 596, very important support along with that 50 simple moving average, with the resistance staying put all the way up to 637. For Netflix, Google hitting a new all-time high, so huge momentum up to 160 now. Market cap almost approaching $2 trillion, and this trade idea worked out perfectly. So if you're still holding, huge congratulations. But again, it is starting to become very overbought with lots of momentum on the MACD and again, L3 banker oscillator after they initiated the position. So this is really where we are with Apple, right? If you really consider this as a huge metric, this is where we are with Apple. So all of this potential is left for Apple, which is exactly why I'm excited about this potential trade idea to play out, because Apple does indeed have that 15 to 16% upside from where it is right now, and targets back up to $199 to $200 for that company. Microsoft, on the other hand, consolidating sideways and approaching that resistance again at $430. So that is going to be that resistance and target back up for Microsoft, and support level kind of aligned with those moving averages inside this green rectangle for Microsoft as well. And then finally, we come over to Enphase and Costco. Enphase pushing higher 1.7%. It's been very, very choppy in terms of price action, just consolidating sideways. And resistance is going to stay put at $138, $139 with a massive support at $108 inside this green rectangle for Enphase as well. And then finally, we come over to Costco, pushing higher, starting to break out of this falling wedge. Next resistance and targets back up to $750. And pushing up over 1.35% on the day. So hope you all enjoyed this video and found it helpful. If you did, make sure you drop a like. And of course, don't forget to subscribe to the channel. We really appreciate that. And links to our Discord and Patreon is going to be down below if you want to access and join our MoneyVest community with over 18 Discord channels, including trade alerts and ideas, trading view charts, watch list, setups, as well as the early access to the MoneyVest Pro platform, where you can get access to the beta launch and give us feedback. And that pricing is going to be locked for you forever at a discounted rate. As always, happy investing, and I'll see you all in the next video.